Anika Kahn is a senior economist with Wells Fargo, and she joins us now from Charlotte, North Carolina. Good afternoon, Anika.
Good afternoon.
So I want to start with what your boss had to say. The CEO of Wells Fargo says that housing is the golden goose of the economy. Now, let me tell you, that has a lot of people kind of worried. I don't think he meant it this way. But if the housing market is again driving this economy, that's putting a lot of cards on one sector, isn't it?
Well, I agree in that housing has been such a detractor from overall growth for a number of years, and we finally made a turn in that we are seeing a sustainable increase in housing. Prices, of course, are in double digits. However, will that double-digit number stay at that high level? We don't think so. We think we'll get a little bit of a give in prices as a result of inventory still are just very, very low.
Well, do you really want...
And the first-time home buyers not in the market.
Well, I'm going to get to that in a moment. Do you really want housing prices to continue to grow at double digits? Because that starts to sound like a little froth and a little bubble. What would you consider a sustainable, good number for this housing market?
Yeah, what we're looking for home prices for this year is somewhere around 5%. The thing that you have to remember about home prices is all real estate is local. In some of the hard-hit areas, of course, like Las Vegas, you're looking at places like Los Angeles. In some of those areas, you're getting upwards of 20%. But the thing that it's important to remember is that it's coming from a very low base.
They fell
so
very,
this is very different.
They fell very far and very fast.
Yes, this is very different from the housing boom.
And let me ask you, though, we're also starting to see that sales are improving along lower-priced homes as well, which is very interesting. What does that tell you?
Yes, this was the first month since 2010 where we see that prices jumped for homes priced $150,000 and below. Up until this point, it's been a market for the move-up buyer. Those are prices in the $200,000 to $400,000 range. Today, we're starting to see a little bit more activity. That move-down or trade-down buyer, it's potentially baby boomers finally getting from being underwater on their mortgages, trading down, and likely beginning to buy those lower-priced homes.
Anika,
this is the first month we've seen the trend.
One of the concerns, though, that some economists have is that we've seen a lot of homes being sold to institutional buyers, that there's a lot of basically speculation back in the market. If they pull out, we're going to have real trouble here. Do you see that happening, or do you think that enough retail investors are buying, not investors, buyers, basically, individuals and families are buying to support this?
Yes, we're definitely seeing that institutional buyer and that mom and pop buyer in the hard-hit areas. But we're also seeing traditional buyers in the market. And what we need to see is a sustainable housing recovery is more traditional buyers in the market. In fact, while data may be a little bit spotty on institutional buyers, we're projecting that we're starting to see a downward trend in that number.
And that could put some pressure
in fact,
on
if we look at international buyers, if we look at international buyers, the National Association of Realtors, they saw that 20% or 27% of buyers are international. So there are a number of markets that they are in particular interested in. What does that mean when they start to leave the market? That means that we have a lot less inventory, a lot less turnover that's happening in those markets. And that means that price will start to give a bit.
Okay, Robert Shiller, the half of the Case-Shiller index, has called this an abnormal economy because of the super low interest rates. Interest rates are going to start to rise. We're going to have to get comfortable with that. So the question is, where is the sort of breaking point on interest rates do you think that could dampen this recovery as far as mortgage rates go? How much, room do the consumers have?
Well, it's a very segmented market, and I think pinpointing one mortgage rate would be an error because the first-time home buyer, even in this rising mortgage rate market, some first-time home buyers are struggling to even get in this market. And so you'll continue to see mortgage rates continue to increase. But overall, it's a very segmented buyer. Those that are buying more affluent, more expensive types of homes, they have a little bit more room
They
to
have
give.
a little more wiggle room. Okay, Anika, thank you so much. Anika Kahn, a senior economist with Wells Fargo from Charlotte, North Carolina. Thank you for joining us this afternoon.
Thank
And you are watching Arise Exchange.